If you're keeping an eye on the Southern Ontario real estate market, you've probably got one big question on your mind. After years and years of sellers calling all the shots, is it finally the buyer's turn? Well, we're about to dig into the November 2025 numbers to see what's really going on.
And this is the question, isn't it? We've all seen the dramatic headlines. So, is this the big crash that people have been whispering about? Or is it something else entirely? A fundamental shift? A rebalancing of the scales?
Well, the November reports give us a pretty clear answer. The power has definitely shifted. After what feels like forever on the sidelines, the buyer is finally back in the driver's seat. So no, this isn't a crash, but it is a massive change.
Okay, so what does it actually mean when we say the buyer is back? In our first section here, let's break down exactly what this new environment looks and feels like.
This is the key term for today, a buyer-leaning market. Now, that doesn't mean it's a full-blown buyer's paradise everywhere just yet, but things are for sure tilting in their favor. Think about it. More homes to choose from, less of that frantic pressure to make a decision in 5 minutes, and, here's the big one, way more room to actually negotiate.
And this quote, this really gets to the heart of the psychology of today's market. Even with a little bit of good news on the horizon about interest rates, buyers are not just jumping back in. They're being careful, they're being patient, and they're waiting for the right deal. It's that caution that's really defining this whole new era.
All right, let's move on to the hard data. In Section 2, we're going to look at the actual numbers that prove this market shift is not just a feeling, it's real, and it's measurable.
So let's start with a big one. Over in the Waterloo region, which you know is a major tech hub, November sales were down a whopping 25% below the 10-year average. I mean, that is not a small dip. That is a major slowdown compared to what's been normal. And if we zoom in on the more immediate trend, that same region saw sales drop almost 15% compared to just 1 year ago. So the market isn't just cooler than it's been over the last decade, it's also down pretty significantly from last November. So, you know, when you put all the pieces of the puzzle together, a really clear picture starts to form. Sales are down. Inventory is up, which means more choice. Prices have finally stopped that relentless climb. And those crazy bidding wars that defined the last few years, yeah, they've pretty much vanished.
Of course, we all know real estate is hyperlocal. Averages don't tell the whole story. So in Section 3, let's zoom right in and see how this trend is playing out differently across some of Southern Ontario's key regions.
This table right here really tells the tale. Just look at the city of Toronto. It's described as balanced to mildly buyer-leaning. Okay, pretty moderate. But now, contrast that with Hamilton, Burlington, or Waterloo, which are firmly in the buyer-leaning camp. You can really see a whole spectrum here, from a bit of a soft landing in some spots to very clear buyer advantages in others. But notice that one common thread. Almost everywhere, sales are below their historical levels.
So, what does this actually mean for you? Well, it means very specific opportunities are popping up. In Toronto, for example, you might find a deal on a downtown condo from an investor who's feeling the squeeze from high interest rates. In Hamilton, there's value in those older homes that are just waiting for an update. And in places like Brampton and Waterloo, the key is finding sellers who have priced their homes for today's market, not for the peak of 2022.
Okay, so that's the what and the where. But what about the why? Why did this happen? In Section 4, let's break down the forces that really pump the brakes on this market.
I mean, the entire psychology of the market has just done a complete 180. That FOMO, the fear of missing out, that drove the boom, it's been replaced by caution and patience. Those hasty, unconditional offers are out, and thoughtful negotiations with conditions for financing and inspection, they're back in. Sellers can't just name their price anymore. They have to be realistic.
It really all boils down to 3 main things. First, and this is the big one, higher interest rates are just squeezing buyer budgets. Simple as that. Second is that cautious psychology we talked about. People are just waiting for things to feel more stable. But third, and this is so key to understanding why it's a rebalance and not a crash, is population pressure. Strong immigration is still supporting long-term demand for housing, and that's creating a kind of floor for the market.
All right, in our final section, let's look ahead. Given everything we've seen, what does the near future hold? And maybe more importantly, what's the right move for you if you're a buyer or a seller?
So your strategy really depends entirely on which side of the deal you're on. For buyers, the advantages are pretty clear. You've got more choice, more negotiating power, and potentially better entry points for the long haul. For sellers, though, it is all about adjusting expectations. You've got to price realistically, make your property shine, and just understand that a quick sale with 10 offers is no longer the norm.
And looking ahead to the first few months of 2026, the forecast is pretty much for more of the same. We can expect these buyer-friendly conditions to stick around, with a decent amount of inventory and pretty modest price changes. The high-end luxury market, however, will probably continue to feel the most pressure.
So we'll end with this question. Back in 2022, the advantage belonged to whoever acted the fastest. But here, in late 2025, the market is rewarding a totally different virtue: patience. Whether you're a buyer who's waiting for the right price or a seller who's willing to hold out for the right offer, the advantage now goes to the one who can afford to wait.